Welcome to Trillions. I'm Joel Weber.
And I'm Eric Balchunas.
Eric, for the third time, we're having Perth Tolle on the podcast. She's the founder of the Life and Liberty Indexes and specifically the Freedom 100 Emerging Markets ETF. She was on the first time in 2019 when the ETF was new. And she came back in 2022 to do a debate with Jeremy Schwartz of Wisdom Tree about emerging markets. And since either of those appearances, she has been crushing it. Her ticker, FRDM, has been absolutely crushing it. What do you want to know about this ETF now that you didn't know before?
Perth has been interesting to me because A, it's indie. I like indie stories. She lived it. You know, a lot of this is about, eliminating countries that are not free and buying the ones that are more free. And her experience as a young person in China affected all this. So the story is really great. And the indie, it's hard to get assets as an indie. You kind of need a shiny object moment, as we say all the time. Well, FRDM has got that moment right now. I mean, I was on a podcast with Dave Nadig called ETF Zoo, which is pretty good. It's a bunch of analysts arguing over stuff. And so FRDM came up, and I didn't realize how good it was doing, Joel. Here's the numbers. It's up 103% in the past 5 years. Emerging markets, we'll say measured by EEM, is up 20%. So think about it. You're 5Xing the thing that you're also investing within. It's not like, I don't know, some random crypto 5Xing the S&P or something. Her stocks and her countries are within EEM. So in other words, she picked the right ones. Or the freedom story has just really played out in an intense way right now. And that 100%, by the way, is even better than the Qs, which is up 92%. And it's double EMXC, which is iShares is Emerging Markets ex-China, which actually had a nice run a couple of years ago. So you're even, because sometimes people are like, well, FRDM is just ex-China, but not really. It's actually done much greater than even EMXC. So I was like, damn, this is time to basically let her maybe do a little victory lap and ask some questions.
Spike the football.
Yeah, and what happened?
Yeah.
How did this work out so perfectly?
This time on Trillions, the future of freedom. Perth, welcome back to Trillions.
Thanks so much for having me.
So we gave you kind of a long setup in our intro there. Why has this thesis worked so well?
Yeah, I am so pleased with the way that thesis has played out in this time period. I mean, 5 years is not super short. It's not super long. We've been around for almost 7 years. So the first year and a half or so was like COVID times, coming out of COVID, and then this 5-year run. So it has been an amazing run. And, as the, creator of the strategy, I couldn't be happier for our clients and just for the way that it's played out. So, I mean, I think it's a confluence of many factors. I cannot take credit for the market, but the strategy did deliver the exposures to the freest countries in the emerging market space. And that freedom story has truly played out very well. It's not just one country. This past year, 2025, South Korea was the top performer. The year before that, Taiwan was the top performer. The year before that, it was Poland. The year before that, it was Chile. So it's been a diversified kind of outperformance in the freest country. So those four that I just named are always in the top four, have always been in the last 7 years in the top four.
Those were the top four. So I'm curious, what, if anything, have you changed along the way during those 5 years of the ETF or the 7 years of the index? What do you feel like have been the most substantial tweaks you've made as you've gone?
So this is something I'm actually quite proud of. We've made substantially no changes to the index methodology since the beginning. And that is the idea of the index, right? So when I started this, as Eric mentioned, I am a complete indie and total unknown. And I, did not have the pedigree of a PM or fund manager in the traditional sense, right? So I came from Fidelity, where, we have the likes of Will Danoff, Peter Lynch. These guys are who I imagine, if they wanted to start something like this, would do it actively, and it would be fine because they have the name. I didn't have that. So the only thing I could do is a systematic rules-based strategy. And also that's what I wanted for this, because I didn't want to be responsible for what countries were in, what countries were out, what countries were, weighted higher. We actually use only third-party quantitative metrics from the Cato Institute and the Fraser Institute. They, measure freedom on 87 different variables, and we use the composite the composite equal weight of all those variables. We don't even, weight any particular variable higher. So we take no subjective stance, and it's as objective as possible. And so I think one thing that I'm very proud of is we always rebalance on time. We always stick to the methodology. And, our partners at ETF Architect also want to make sure that we do that. So there's a layer of kind of compliance there that says, okay, it's a passive strategy. It's going to stay that way. And then our index committee also acts as a checks and balances on, myself and the index itself.
When I look at this fund and I compare it to EEM, or the Emerging Markets Benchmark, which is what a lot of people own, so this is what a lot of people own, it looks like there's about 40-45% difference. It looks like, for example, if you screen out China, already you just take 25% out of your portfolio. Then you've got Russia you screen out. Then you've got a couple Middle East countries like Saudi Arabia and a handful of others. So I get to around 40%. So that gives you 40% budget to spend on these other countries, which you overweight, as you said earlier, Taiwan, South Korea, Chile, Poland. What is driving the performance here? Is it that those countries, they're more free, and that has actually caught the investors' attention and the outperformance of those countries? Or is it that investors look at these less free countries and are turned off?
So yeah, it's both. And, country attribution would account for, country selection would account for about 83 to 84% of the outperformance attribution in the strategy in the past several years. Not having exposure to Russia when Russia went into a war, not having exposure to China when it all melted down, that really helped. But it's really these the outperforming smaller countries that are not very high weights in the other indices that have really helped as well. And, we do that kind of country screening before the freedom screening, where we look at a country market cap as in relation to world market cap. So these are countries that we have deemed to be large enough and liquid enough to be included in a exchange traded product, but they are less than 1% in the cap weighted indices like the MSCI and FTSE indices. So for example, Chile and Poland, they're both less than 1% in the other indices. So investors have in the cap weighted strategies have really missed out on some of these higher growth, smaller countries that are actually big enough to trade. It's just not big enough for maybe their product, but or in the cap weighted strategies, there's some much bigger countries. So I'd say there's just been so much opportunity to be captured in the freer emerging markets, and so happy that we were able to capture some of that.
So do you think it's more because of what you own or what you don't own?
It's more what we own, but what we don't own definitely helped as well. 83 to 84% of the attributable outperformance is country selection.
So when you were starting off, I remember, I think you were literally knocking on doors. Like, I think you said you were going around the neighborhoods in Houston, knocking on doors and talking about your fund. And you probably knew the investors in the fund at first. Then you get this shiny object moment, and now this thing is taken in money hand over fist. I think it's up to almost $3 billion. It's taken in like weekly flows for the past 6 weeks, something like that. And the flows are getting thicker. We're talking like 150, 200 million, 300 million a week. So the fish are jumping in the boat, so to speak. Are you interacting with these people, or are you just sitting there going like, wow, like where's all this money coming from? How does that work from knowing the investors in an intimate way to sort of, I guess blowing up is the right word here, and then all of a splurged you've got way more investors? Do you know who they are? Do they talk to you? Has your life changed? Have you, splurged on any nice cars or anything?
I mean, you gave me this super layup question trying to get me to be happy and in the moment when we were on ETF IQ the other day. And I totally blew it by instead highlighting all our periods of underperformance because I just refused to be in the moment. And so I will re-answer that question now. Yes, my life is different, but it's not that different. I do have a slightly nicer card. I literally traded it, X1 for an X3. It was literally like not a huge difference just because I drive around a bunch of teenagers. I don't, my house is the same. I haven't changed things that much. This is something that happened very quickly over the last year. We like tripled our assets. And yes, I do remember those early days, and I actually missed those early days. And I was knocking on doors, not, in Houston because, I was didn't know a lot of finance people here except the Fidelity guys, which, they couldn't do something like this at the time. I was knocking on doors at ETF conferences. I don't know if you remember, meeting you at like ETF.com's Inside ETFs 2018, getting you to, sign your book, or maybe that was 2015. I don't know. And just, saying hello to all the like networking with all the issuers, trying to get somebody to launch the thing. And then nobody would do it. And then finally somebody said they would do it. And then after a conference at Inside ETFs, they backed out. It was the most, they're the worst end to a conference ever, so it was a lot of that. And I remember those days, and I actually missed a time when I had to struggle to get assets, when I had to, convince people that it's not crazy to not have China, it's not crazy to have a bunch of Chile and Poland in a fund for emerging markets. I like being the contrarian and like the only voice in the room saying something. So now it feels a little less original. And I feel like I'm saying the same thing over and over. But I have no complaints. I absolutely I'm thrilled with how this has turned out.
She's like Warren Buffett. She's gonna have the same house in 10 years, and just to make a point, drink cherry Coke. Like, all right. Anyway, by the way, Perth, in my opinion, is the most punk rock person in the whole ETF industry. Yeah. I always said when she comes on stage, it should be to Straight Outta Compton from NWA. It just or Public Enemy, something like that. There's something very rebellious about what she's saying. Most of these other issuers won't touch China. She will criticize it. And as we know from following other news events, no one does. And it's risky to be out there like that. And I give her credit for that. There's something that always interested me for somebody who was willing to sort of go a little further out in the branch on any issue. In this particular case, it was criticizing some of these dictators and authoritarian countries in a way other people would not. And, other people even have products that exclude certain countries, but they won't say a word. It's just very interesting. Do you have any comment on that?
Yeah, so it's hard to speak out against autocracies, right? I think I have a easier position for that just because I have actual experience in the country. I was born there. I came here at the age of 9. I went back after college, lived in Hong Kong and traveled throughout mainland China. Had, personal experience with friends under the one-child policy who had no name, no birth certificate, no school records, just because they were born a girl, and know that they're the lucky ones. There's 60 million missing women missing in China in my generation. That's not something that you can easily replace. So I think I have a lot of more front row seat experience. And so that gives me a little more, credibility on the subject that if, let's say, head of some big firm in the US said something, it might not go over as well. But yeah, I think freedom of speech is important. Freedom of media is important. And so I'm happy to, most of the times, say what I think is true.
So we've actually seen, I'll say, a fair amount of democratic backsliding throughout the rest of the world and the rise of populism in developed markets. And this is since we talked to you last even. I'm curious how you're looking at that. And is there another opportunity for, I'll call it a sophomore album from Perth Tolle that's not about emerging markets, but might be more about the developed world?
So, you know what's interesting? So right now, we are getting demand from global investors from all over the world for the emerging markets product. And so there are people that are now trying to package the product for their own, currencies and in a way that their clients can invest in a tax efficient manner. And then in the US, we're getting more requests for developed market products. So developed markets, there's not as much divergence in freedom levels. It's more homogenous, and they're all relatively high in freedom levels. So the thing that I've noticed with the rise of populism around the world is that in some of these emerging markets, which is what I've been watching, when we see that happening, the checks and balances and the institutions in the freer ones do prove to be strong. Voters come out in droves to vote in, a more balanced government in countries like Chile and Poland recently. South Korea just jailed their, ex-president for life for unilaterally declaring martial law one day. These types of checks and balances and stronger institutions in civil society is what I'm seeing happening in the freer EMs. And then DMs, yes, there is. I do see that there's a little more opportunity than before, as there is a little more divergence than before with the rise of populism. But a lot of that rise of populism is also happening in the smaller DMs or in the larger EMs.
Let me address this real quick, because I think people in the U.S., we're so spoiled with all our freedom that the tiniest little thing, which is no big deal, people are like, freedom of speech is dead. And it's like, okay, relax. Can you help, I guess, give context or perspective to people who might think, oh my God, the U.S. probably wouldn't make her screening process now. That's absurd, right?
It is. I'm gonna push back on that a little, Eric. So yes, that is absolutely absurd. U.S. is number 15 out of 165 countries on the Human Freedom Index by Cato and Fraser. That's on par with our top EMs that are included in the fund. So yeah, it definitely would not be an exclusion if we did something, right? So that's not even a possibility. And it's just so far from, the lower scoring countries like China, Saudi Arabia, and so forth, where you say something and you can literally be disappeared for it, or your family's disappeared, overnight, or your IPO is scrapped, or, you're now a nonprofit, so that's completely a different universe. But the latest report from Cato and Fraser did come out and say that the U.S.'s score is expected to decline because of things like government interference in private market activity. So like government taking stakes in private companies, and things like the tariffs. Now, I don't know if that's going to be different now that the tariffs have been shot down, which does show some checks and balances, and whether that will last. So that is, some of the more protectionist policies on trade and the interference, the size of government in private markets. The score for the U.S. is expected to decrease, but the decrease in score doesn't mean it's not like a drastic situation. It's just, hey, we're expecting something here, and those are two variables that I mentioned out of 87. So yeah, there are some concerns, and I think it's good for people in a freer market to be very vigilant, maybe hyper vigilant, because freedom is it's a very it's a fragile thing.
So Perth, because you're watching the Cato and the Fraser indexes so closely, I'm wondering if you think there's another emerging market that might be approaching something of a breakout moment, since we've talked about South Korea and Taiwan and Chile and Poland. Like, those are somewhat expected, I guess. Is there anybody who's unexpected that you're got your eye trained on?
So a lot of these countries that are geographically close to very unfree markets are getting an influx of human capital. So countries like Colombia getting a lot of immigrants from Venezuela, for example, a lot of migration there. Countries like Poland getting a lot of migration from Ukraine. So these are countries that are benefiting from this kind of freedom of movement that is coming into their country from very unfree markets. That will show up in the long run. In the short run, actually, India, their population just surpassed China's. India is a country that in our index goes in and out from year to year quite often, just because they're right at the average of the emerging market eligible universe peers. And so they are out this year. They were in last year, and they've historically, as we mentioned, had very high trade protections, tariffs, and non-tariff trade barriers that has weighed on their economic freedom score, and had some other issues on the personal freedom side as well, like freedom of media. Like they, raided Modi's when they did BBC did the story on Modi, they raided their offices, things like that. So there's issues and they come in and out, but the population growth is undeniable. And, demographics are destiny. So especially in emerging markets. So I'm very bullish on them. Now, my opinion does not factor into the methodology whatsoever. So that's just my opinion on that.
Okay. And what about the Middle East? Because there's been so much kind of deal making over there. And we're talking like, big numbers. Is there anything there that feels like it's something to watch, or do the rules just simply mean there's few and far between as opportunities go?
Yeah, so the Middle East is interesting because if I did only economic freedom, they would score actually quite high. Countries like Saudi Arabia, Qatar, UAE, these are countries that score very, very high on economic freedom. But because our data set uses both personal and economic freedom, so civil, political, and economic, and the personal freedom is half of the overall, score, they are actually scoring quite low just because the majority of that being their very bad women's rights in these countries, and freedom of movement, speech, expression, et cetera. So, and these countries are also very oil rich. They're very resource rich, but without the diversification of industries that you see in some of the freer markets.
Eric brought up the tremendous inflows that you've seen over the last. You've made it sound like it's really been within the last year or so. I'm curious. What do you feel like you can attribute that to? Has it really been about American investors looking for international opportunities? Is it the Sell America idea? Is it just a reaction to Trump, or is it performance chasing, or something else?
Yeah, I think it's a confluence of factors. I agree with Eric that I don't think Sell America is like sustainable. But I think that there is a higher, there has been a performance rotation between the US and developed markets and emerging markets. So, both developed and emerging markets outperformed the US last year for the first time in forever. So I think there's been some attention to diversification. And if emerging markets, for example, were to have a breakout again, like in the early 2000s, then yeah, I think there would be a lot more diversifying into the emerging markets, and I think that's ultimately it's good because you don't know what's going to go up, you don't know what's going to go down. That's why we diversify. So it's never too late to do that. And I think in the U.S., because the U.S. market is so strong, there is a lot of home country bias. And, I was an advisor, I know this, and I had a lot of home country bias. I still do. So I do think that this Sell America is not the trade, but diversification is always helpful.
Yeah, we looked at it. We thought the Sell America, by the way, they started Sell America on the tariffs last year when the market was down like 20%. Now they use it every day when the market has like a down day. They're like, Sell America is back. I'm like, Dow's off like 100 points. I'm like, all right, relax. You're going to cry wolf here. It won't mean anything. But anyway, we haven't noticed Sell America, but we have noticed is people buying some other things. And that could be gold too. Gold had a nice run. International ETFs, cash. So people are kind of hedging America, maybe not selling it.
It's a diversification, right? Because most people are overweight the U.S. because of the outperformance.
I think what's happening in your case is you do have a core base of people who believe in the strategy, but now you're getting some tourists who are like, ooh, look, shiny object. And it happened with ARK, happened with Bitcoin, happens to everybody. The good news is, let's say it goes down, has a bad run, half of those tourists will stay, and then your base will stay. And you just need to break through one time, and you will just live on as a liquid known ETF that does this thing. So I think that's how I see it, but I do see some of the flows in the past 6 weeks because that's when it really got, I think your assets probably doubled in the last month or two, right? Something like that. I think some of those are probably just so enamored by the performance. Is that fair?
Yeah, there's definitely probably some, people are screening for performance in whatever screen they use and finding it near the top. And yeah.
But Perth on
It
ETF,
that kind of scares me a little.
Yeah, I know. And Perth is smart, and she hangs out with Wes Gray, who's always talking about this. She was on ETF IQ, and she goes, listen, it won't always be like this. We are going to have downtimes, please. First person ever, PM on TV, who said, no, things could get bad. I appreciate that.
But this sounds so good. The line that she had in the show on ETF IQ that I wrote down, freedom is not a trade, it is an investment. I was like, that is a great line.
Did that just pop out, or is that like something that's in your, is that your motto?
That's a kind of in my notes, and that came from Mark Absey, my friend who is on the index committee as well.
Oh yeah,
so
I know him.
He was like, oh, you're going to be on IQ. Remember, freedom is a trade.
He gives me crap on Twitter about once a month. He comes in, he just comes into my replies, and it's great. He's a great guy.
But Perth, a thing that if I really step back and think about this, so much of what we talk about with ETFs over, the almost 10 years we've been doing this podcast is most of it is tied to an index and is passive. And yet you've managed to come up with a way of not only having a passive approach, but really fundamentally an engaging, active management argument. And I'm curious, when you kind of see what you've been able to find here, and you think about the universe of active investing and potentially the future of active investing, like what guidance or lessons do you think you and Freedom have for active investing as a whole?
Are you looking at Freedom as active, or are you looking at it as
active? I look at it as active because you have an index, but you have rules and methodology and you adhere to them. But fundamentally, there's still an active call here where you have an investment thesis that you're adhering to.
Yeah. So I think we saw a lot of, and this is something that occurred to me during COVID, which is, and I think people pointed this out to me as well, not just occurred to me, but there are, different ways to slice and dice the market, and market cap weighting is often not only ineffective, but it's often flawed. Now, it does work very well when markets are very liquid and very large, right? So developed markets, US market works very well. It's very hard to beat. But when you get into kind of smaller segments like emerging markets, for example, maybe the other strategy or another strategy is to look around the world and see what's going on and then invest that way. So, and that's what ARK did. That's what we did. And a lot of these thematics, that's what they do. So I think thematic is something that I've always kind of liked. And the other thing about that is when people invest in a thematic or something that has a theme that they believe in, it's easier for them to stick to it in bad times. So, like Eric said, I'm hoping that our tourists coming in now are performance chasers. If I could say anything to them, I would say, yes, zoom in on those periods of underperformance, because we do have those as well. Look at this as a long term, but also know that, yes, freedom is an investment. It's not a trade. And if you're an advisor going into this for your clients, when things are bad, let's say that we underperform because, for example, China or Saudi Arabia outperforms. Tell them that's why that you were underperforming. And most investors will be happy with that. I am an investor in this fund, and I find it very easy to stick to in bad times just because I do absolutely believe in the strategy. So when you're investing in a theme or a strategy that you believe in, it's much easier to stick to it in the bad times. And that alone will increase your chances for success in the long run.
All right, Perth, last question. If you were launching FRDM again today, what would you do differently?
That's a really good question. I think I would not be as stressed.
Easier said than done, maybe.
Yeah, I would be a little more chill. So I really love the way that this all turned out. I work with the best operating partners in the world, ETF Architect, those guys, Wes Gray. I have the best LPs in the world, Rob Arnott, and my other LP over in the UK who wants to, be anonymous. But, I work with the best people. I was able to, because we went so slow in the early years, because I was being, a mom to a young child at the same time, I was able to spend some time getting to know the industry, getting to know people like Eric, and just had so much support. And I believe that we have support that I don't even know about, because we've had times like in the first 5 years, Eric pointed this out. The first like 5 years, we had no outflows, like no net redemption days. I believe that we have so many supporters out there that were rooting for us this whole time. And I just wanted to, or if I were to do this over, I would focus more on that and stress out less. I'm very stressed because I also have a teenager. So, and times when I have an opportunity to celebrate with people who have supported us since day, minus 300, like you guys, like Eric, when he gives me a layup question on TV, I would answer it better and be happier and not be like, please see our periods of underperformance. But, again, that's how I was trained, and I work with people who make sure I still do that. So it's unlikely that I'll be able to relax, but that's what I would do if I could do it better.
Okay, we'll leave it there. Perth Tolle, thanks for joining us on Trillions again. Thanks for listening to Trillions. Until next time, you can find us on the Bloomberg Terminal, Bloomberg.com, Apple Podcasts, Spotify, or wherever else you like to listen. We'd love to hear from you. Hit us up on social. I'm at Joel Weber Show. He's at Eric Balchinas. Trillions is produced by Magnus Henriksen.